From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 10th, 2017. Today we're going to be taking a look at the USDCAD, the US dollar versus the Canadian dollar, for today's trade analysis. We're starting all the way out here on the daily time frame. I zoomed it out to get a wider perspective of this currency pair so we can really see what the trends have been doing for the past, well, about a year or so. Left-hand side of the chart, black trend line, black box. You can see clearly a downtrend went into a downtrend where we saw trend movement congestion within the black boxes all the way down to the bottom of the chart. Well, since April or May of last year, 2016, we begin this sloped uptrend, this slowly rising uptrend along the blue trend lines. I put two double trend lines down there. We've been discussing that in the trade room over the past several days. The double blue trend lines showing the rising slope to the trend. Within that trend, we've seen several times where the market comes down, challenges where those two double trend lines are, kind of a rising support zone, if you will, and bounces off it and goes back up. You can see it. All the red trend lines I put on there that show us those bounces and reversals back up in the direction of the trend. So that's important because that's the pattern of the current trend we are in. Let's zoom it in one time, and you can see there it is a little bit better. You can see where the market came down here in between the two trend lines, reversed, in between the two blue trend lines, reversed, touched the top blue trend line, reversed, went between the two blue trend lines, reversed, and here we are again between the two blue trend lines. So we're at a critical decision point, a period inside this blue trend, these two blue trend lines, where historically there's been a reversal to go back up. So if that happens again, we want to be looking for opportunities to trade that pattern of that trend. Now, of course, clearly the trend could change. We could see the market break down through the blue trend lines and go lower. But for the time being, as long as it has not broken those two blue trend lines, we have to make some sort of assumption that there's the potential of a return of that pattern, which would be a break of highs, higher lows, and a return of the short-term uptrend where we have been in a downtrend along the red trend line. Let's go ahead and zoom it in one more time. You can see the yellow zone right now, 1, 2, 3 days, yellow shaded area here right between 1.3265, 1.3290 is holding as our resistance, right where the red and the blue trend line come together here at the yellow shaded area. That's holding as resistance right now. Green shaded area, 1, 2, 3, 4 days, are just above the 1.3200 level. 3210 to 3230 is the green shaded area, is holding as our support. So we know that there's potentially one of two things that are going to happen. We either look for reversal and this breaks the yellow zone and goes back up, or we look for continuation, it breaks the green zone and goes back down. So those are one of two things that we would look to happen here for the USDCAD. So if we're going to trade the blue trend lines, we're looking for buys. We're buying the green shaded area. That's one possible opportunity, or a buy above the yellow zone. Those are our two long opportunities in the direction of the two blue trend lines. Buy the green zone or above the yellow zone, we look for it to go back up. Now, if you're a seller, if you're thinking, you know what, the short-term trend, the red trend line has been bearish. We've had some bearish momentum over the past few weeks. If that's the case, then I'm okay with that. But you're looking for sells into the yellow zone or breaks down of the green zone, breakdown of the green shaded area. So that's really our four trading opportunities that we're going to be dealing with until one of those two things happens. It gets above the yellow zone or below the green zone. So we have these opportunities ahead of us for the day today. 4-hour time frame doesn't really change it, just gives you a little zoomed in view of what's been happening over the past several days. A lot of support there at the green zone, a lot of resistance at the yellow zone. It's just been kind of bouncing around, rattling in between there. So buyers are looking at buys into the green zone. The deeper you can get, closer to 3,200, will minimize your risk for going long. You don't want to buy it now. Buying close to the yellow zone runs the risk of resistance. So don't buy it now. As it approaches the yellow zone, you buy on a dip to the green zone or a breakout above the yellow shaded area. And I think that could be what I'm looking for. I'm already looking at a buy from the bottom of the green zone and targeting the yellow zone or higher. And of course, the other side of the story, again, is coming into the yellow zone may provide you with an intraday selling opportunity for the day today on the USDCAD.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.